Welcome to the Investing Podcast presented by Tusk Media. This is Outsider Trading, an audio and video deep dive into the people, places, and things that we find most interesting in the market.
Hey everybody, welcome back to the Investing Podcast. It is Bank Week version 2.0. Last week we previewed earnings for JP Morgan, Citigroup, and Wells Fargo, three banks that we own in our portfolios here at Narwhal Capital Management and that we talk about quite a bit with Tusk Media Broadcast. This week we're recapping earnings. We got the earnings last week. I'm Andrew Hall. Joining me today, Ben Nye, and we are touching on Wells Fargo right now. Let's just jump right in. You went through and you graded kind of all these banks, these three banks, and you did their actual earnings, so kind of the underlying data themselves, as well as the conference call. For context, JP Morgan, you gave an A- on results, Citigroup a B, Wells Fargo, you gave a D, as in dog. On the conference call, in terms of some of the messaging and the themes that were addressed, you gave JP Morgan a B, Citigroup a C, and Wells Fargo a C. First question here, again, a D on results for Wells Fargo, a C for the conference call. Were you grading on a curve?
Yeah, I mean, I wanted to make sure that no grade inflation here,
There we go. So it was a true number here.
Yeah. So this wasn't quantitative at all. It was just kind of, what is the overall impression? Overall impression for Wells Fargo, if you're starting at a C, they beat their numbers, but there are a few one-time items. The internals weren't the best. The tax rate was lower.
It was a weak beat.
It was a weak beat, so you have to dock them for that. So that's how they ended up with their D. Conference call was average. I mean, they can't really come out and say everything's going to be phenomenal over the next couple quarters when you're dealing with PR mess in the form of the account thing. So, it's tough to get better than a C there, but that's how it rolled.
Yeah, and I think in some regards, if you go back and watch our preview video, not necessarily a surprising grade.
Yeah.
Again, it would be a stretch to say we were sorely disappointed in earnings from Wells Fargo, given what we knew and what we expected. Yes, the student got a D on this exam, but the student had also showed up late and previously been kicked out of class a couple times. So
exactly.
The D was certainly within the realm of possibility and what we might expect. This does seem like the stock, of the three, if JP Morgan is kind of leading the pack. We've talked a little bit about some of the challenges that they face because again, there's the leader in this space, and the idea of continued outperformance becomes increasingly difficult over time. That may mean the inverse is true for Wells Fargo. This may be a stock with the most potential. As you start to look there, I don't want to put words into your mouth or to convey too much confidence to investors out there, but does this look like a stock that's still a rebounding story? That was what we expected going in, was, hey, this is going to be a company that has to rebound some, even from an image standpoint. Are they still on that path, or has that been pulled out from under them?
I think they're on that path. As I look for the catalyst, though, I think it's going to be a longer story than I would hope. I think we're talking about really 2018, whether you can get a normalized picture for the company, or at least to the end of this year. I don't think you're going to get a big catalyst with the C-CAR. I don't think they're going to raise the dividend by a ton. They're probably not going to have a ton of share repurchases. They gave a conservative tone when they were describing how their process in terms of submitting their demands for dividends and share repurchases to the feds. So I don't think there's going to be a big catalyst there. And so you go back to, it's going to be more of a, how do mortgage originations and loans progress through the year? What is the path of interest rates? And then can they grow revenue enough to get more leverage on the efficiency front? Because I don't think expenses are going to come dramatically down over the next couple quarters.
Yeah, and it's interesting. We've hit on this in all, I guess, 4 of our videos now. The impact of interest rates has been relatively, I don't want to say negligible because it's been there and it's been calculated, but to say that that's really a catalyst, at least for the previous quarter, would be a bit of an exaggeration, I think. And that's something where you almost get to the point where the headwinds of loan originations could really quickly neutralize that, especially with a company like Wells Fargo, which we shared data kind of on our viewpoint on the residential mortgage space and the bullish take we have on that. All of a sudden, that starts to look a little bit shaky.
Yeah.
where do you see Wells Fargo finding room to improve? You mentioned it's going to be a 2018 story. If they're not going to get a big bump from interest rates and a big bump from mortgage originations, how do they kind of piece this together, or is it just a matter of kind of taking a lay low approach, kind of conservatively move forward?
I think it's the latter. I think it's a blocking and tackling story. I don't think anyone's throwing Hail Marys down here. I think that it's just a relatively a perfect storm last year. You know, the decelerating of mortgage originations, and yet high expenses in the first quarter because of payroll taxes and 401k expenses and stock-based compensation, and so expenses were elevated. Part of that's seasonal, part of that's dealing with the account issues. There was that $110 million class action settlement, and just the distraction, not only for the lawyers and everyone who's on the payroll of Wells Fargo on the risk management side, but then also you get down to the frontline operators and who are constantly having to deal with this and apologize to their customers and tell people what they're doing to manage it, and all of a sudden you see those times elongate for the number of meetings, so the number of meetings shrink, and people who are thinking about, where am I going to get my mortgage? Is it going to be through Wells Fargo? Well, I heard them in the media all the time.
Right.
So it's just it has repercussions outside just the settlement.
Yeah.
That are difficult to identify, but they're there.
Yeah, and I think what's interesting too, I mean, kind of as we think about this residual, dare I say, non-sexy comeback story for Wells Fargo, it is kind of this idea that they're going to have to continue to hit singles, continue to take bases on balls, so to speak. They're not going to be going for home runs, but you do see some evidence in that, and some of this is just an economic read-through, but just some numbers that you pulled, Ben. Total average loans up about 4%, quarter-end loans up a little bit. You had, things as small as, debit card purchases up about 4% year over year. Credit card purchase volume up about 3% year over year. These little line items are going to be the things that I think you're almost going to have to focus with Wells Fargo, because they're not going to just swing for the fences and try to make a lot of noise and steal headlines. They're not in a position to do that. Because again, the rumors are out there, so to speak.
Right.
And the noise. And rumors is probably the wrong word, but just the reputation is out there. So they're going to have to continue to get better and better at executing, return to kind of, I think a year ago we would have said, hey, Wells Fargo's a really good operator. They're really strong operationally, and they've got to kind of regain that reputation with these smaller line items.
Which I respect. I mean, I think that's the way to go about dealing with a situation like this. I mean, you could see some other people saying, well, auto originations, that's low-hanging fruit. We just need to get volume.
Right.
Wells Fargo is actually tightening standards on auto originations, which is hurting their loan growth, but it's having a positive impact, I think, on their risk profile. And then when you talk about C-Card, they don't want another bad headline from saying Federal Reserve rejects Wells Fargo. There's the one bank that gets rejected. So they say, quote, they're very self-aware of the possibilities for the areas of criticism or skepticism based on our own peculiar, that's the word they use, peculiar specific circumstances, and we think we've accounted for that in the ask. So I think that they're doing what they should be doing, but that's not translating into big growth, huge upside surprises. This is a longer term story than that.
So given that, the longer term story, what do you expect in the quarters to come? And again, it's a longer term story, but if this was a D quarter, is next quarter, are we hoping for a C minus? Is it going to be another D? Could it go, have we hit the trough, so to speak, in terms of earnings and just the narrative on the company?
Yeah, I'm hoping for a C. I think you could really improve the year-over-year efficiency ratio. This time the year-over-year efficiency ratio, I think, declined by like 4 points or something. It was incredible, like 58.7 to 62.7.
That hurts.
So I think that should improve next quarter. Another interest rate hike would be a catalyst, small catalyst, but it would help be moved in the right direction. Strong home buying season in the summer months would help. But beyond that, it's more that Wells Fargo is able to capitalize on those catalysts as well. So that's what I'm looking forward for Wells Fargo. I think that, you know, it's the same bank that it was last year at this time when everyone loved it. And I think that, you know, it's the actual operations are somewhere in the middle. I mean, it's not on the extreme positive, it's not the extreme negative, and I think over time you'll see kind of revert to the mean.
Very good. Any other closing thoughts?
That's about it for me.
Very good. Make sure to check out all our videos. Again, we do own Wells Fargo, we own Citi, we own JP Morgan, but we did previews and recaps on earnings for all those stocks, as well as a macro look at some bank stocks in the financial sector. Check that out, youtube.com/Tusk Media LLC, twitter.com/Tusk Media LLC, and facebook.com/Tusk Media LLC. Y'all have a great day.
Tusk Media is a subsidiary of Narwhal Capital Management. Ratings and reviews of Tusk Media content are not to be construed as endorsements of opinions, analysis, or services offered by Tusk or its parent company. The opinions and predictions shared here are our professional beliefs at the time of publication. We are not under duress from any of the corporate entities mentioned. This is not a solicitation to take any particular action. Although we are investment advisors, this information should not be considered investment, legal, or tax advice. We strive to be as impartial, insightful, and accurate as possible. We base our opinions, analysis, and calculations on information we believe to be reliable, but we cannot guarantee its accuracy. We can, however, guarantee that our opinions will sometimes be flat out wrong due to a variety of factors. Employees and clients of Narwhal Capital Management may or may not hold positions in the securities detailed and may or may not hold these positions in the future. A full list of all securities purchased, sold, or held during the 12 months preceding the date of this publication can be provided upon request. Unless otherwise noted, all data accessed via MarketWatch or the Bloomberg terminal. Past performance does not guarantee future results. A copy of Narwhal's Form ADV is available at the SEC's website, www.advisorinfo.sec.gov, or from Narwhal upon written request.